Welcome back, folks. Well, today we have on Mike Hollowell. He's the principal with Irvine Advisors. It's alternative type investing. We're gonna get into that. First, I want to welcome Mike here. Get to know you a little bit better.
Thank you,
Nice
Karen.
to see you again. You've been here before.
I've been here before once, yes.
And tell me about exactly how long have you been in this business? And I understand that Irvine Advisors was about three people that kind of came together for a specific reason, right?
Correct, yes. We've been around as Irvine Advisors for about a year. Individually, though, the three of us, myself and my two partners, have been doing this for quite some time, quite a diverse financial background between the three of us. But last year, we decided to pool our energy and form Irvine Advisors so we could now offer alternatives to more people and, again, to give them some more opportunities that they may not see.
And that's what we're talking about here. In fact, underneath your logo, your slogan is for the investor looking for alternatives. People hear the word alternative, and we don't need to discuss what's happened over the years of all the different types of investments there were, derivatives and all these kinds of things over the years. So people hear that word, and it makes them kind of just take a step back. So let's get into that. Exactly, there are many kinds of alternatives, but just give me sort of a basis of what they are.
Sure. Yeah, the word alternative can mean a lot of different things, and quite frankly, it does. In the investment world, you have stocks, which can be mutual funds, direct stock ownership. You have bonds, which could be bond funds as well. And then you have cash. So a traditional portfolio would see stocks, bonds, and cash. Over the last several years, actually the last several decades, the term alternative has come into play. Alternatives are really anything that's not stocks, bonds, or cash, and it can be really anything that's out there. We tend to focus a little more on real estate oriented investments, private equity, hedge funds. The difference would be when you're talking about alternatives, there's a myriad of them out there. We stay focused on what we offer. What you'll see though is over the years, the large institutional investors, the big endowment funds, they would put a lot of their portfolio in alternatives.
Right, exactly.
Over the last 10 years or so, there's been opportunities for the more everyday investor to start participating in some of these alternatives. And so we have investment options that can start as low as a $5,000 minimum to get into something like this. It used to be a $5 million minimum.
Yeah, exactly, yeah. You had to be an investment fund, a portfolio manager or something.
Exactly,
like that, right?
And then so that's where the smart money was, and so these real estate firms and these other alternative investment sponsor firms found a way to make these investments a little more bite-sized.
And when you look at these different alternatives, there's so many of them out there, different kinds. Are there some you really like and maybe others you don't, and why? And why would somebody even consider these?
It's a good question, and there really is, like I said, lots of options. We tend to focus on stability type of products. We're focusing on high yield. And when I say high yield, I mean anywhere from 5 to 12% annual cash-on-cash return. And so in the alternative world, we're able to find properties or find opportunities that are not necessarily correlated to the overall economy or the overall stock market. So as we know, the stock market's pretty volatile. Not a lot of growth, at least right now, and not last year. But alternatives can provide some cash flow and some yield in a very volatile market. So we look for opportunities that are stable cash flow type of opportunities, monthly distributions, some growth on the back end, just a way to stabilize your portfolio.
And you bring up something very important is the yields that they may produce. This isn't, I don't know, how many years ago when you could get 12% on a CD? Those days are gone, even though the interest rate just went up, a quarter, 0.5% or whatever it might be.
Point.
That's not going to trickle down very much to the people that really need it. So this is a place that people can put their money in, get the positive cash flow. What about, of course, the risk involved compared to maybe somebody putting in something that they may hear about, like annuities or CD or something like that?
Well, that's a good question, and risk is always a factor, and we look at that very carefully. Like I said, there are many opportunities out there. We tend to focus on the ones with, we believe, the lowest amount of risk for the return that it produces. There's no guarantees in these type of investments, but we're looking for stable cash flowing opportunities that should be sustainable. And and there are some of our opportunities where maybe it's a little riskier, maybe it has a potential for a higher yield down the road, but we determine with our clients what's the best fit for their portfolio.
Okay. Now, in today's market, the way it's gone down, is this a way to sort of protect your investment, maybe offset? As you said, people might have their money in stocks and bonds, and this is an opportunity to maybe not necessarily take that money out, but take other money they have and try and offset that, basically sort of even out their investments, right?
Correct. A lot of what we do is based in real estate. We have some real estate investment funds. We have direct investment real estate. This is all professionally managed institutional grade property that provides a long track record of stability. Typically, real estate is a very stable asset.
Yeah.
Usually steady Eddie all the way. Every once in a while you'll have a little dip, but it certainly does not have the volatility that you'll see in the day-to-day transactions on Wall Street. And part of that is just the fact that it's a fairly illiquid investment. So when you have an investment that doesn't be affected every day by the different ups and downs of the stock market, it will provide a lot more stability.
Now, what interests me here is some of the, I guess, some of the investments you can get in for as little as $5,000 to $25,000, which is not a whole lot. For some people it is, but in today's investment world, as it used to be to invest in things like this, it's not a whole lot of money. So people might go, well, if I'm putting in this small amount, how much is my potential to get back? Is it pooled with others? Is it put in sort of the Irvine Advisors mutual fund type situation?
Interesting. Good question. So at Irvine Advisors, we don't manage your portfolio.
Okay.
We don't manage your assets. You may have your money at Schwab, Fidelity, Ameritrade, wherever your money is,
okay,
it stays there. These type of opportunities don't come up at Schwab or Fidelity. You can't find this there. These are small investment opportunities that the Schwabs of the world they quite frankly don't have the resources to vet these. So we're not trying to manage a portfolio. We're taking a piece of it and we're going to put it in a stable, cash flowing investment opportunity that may help balance out their portfolio.
Okay, that makes a lot of sense. And when you look at all these different alternatives out there, do you see new ones coming online, ones that maybe over the past 3 years that weren't available years before, some new avenues, like in investing in maybe a new tech company or something like that?
Absolutely. As I mentioned, these firms that are out there, they're getting smarter and smarter and figuring out ways to bring these types of investment opportunities to the public.
Yeah.
And there's new stuff coming online weekly, monthly, and we look at it all very closely. And to be quite frank, we look at a lot of opportunities and we pass on a lot of opportunities. We look for the ones that are very specific to our clients' needs and we start focusing in on those and really do our due diligence, and we've had a lot of success.
All right, very good. I know we're going to have you back next time. We're going to continue on this subject if we may.
Sure,
Sounds
that's great.
good?
Yes.
But I want to give you the website for Irvine Advisors. It's very easy, Irvine Advisors LLC. Remember that, LLC.com. The number is 949-825-6030. And forget the website, just remember Irvine Advisors. You'll find it. Mike, good to see you.
You too.
All right, we'll have you back soon. All right.
Great, looking forward to it.
All right, we'll be right back.